This week, my grid flagged significant trend and shift in the AI trade. Here's what I have. 2 pain points. AI hype fading creates market divergence risk. The fading of AI hype introduces a divergence between stock prices and actual business performance for many semiconductor companies. This creates a risky environment where valuations inflated by AI narratives could correct sharply. Companies and investors relying solely on the AI growth story may be exposed to significant downside. Memory cycle risk remains a significant threat for investors. Investors trading semiconductor memory companies like stable compounders may face severe losses during cyclical downturns. The analysis shows Micron has grown revenue approximately 30% annually since 2016, but memory is brutally cyclical, with prices and margins fluctuating wildly. This vulnerability could cause steep corrections when supply catches up with demand. Source Reddit, which is pretty credible. And before I come back to this, semiconductor, which is a topic, look at some of the picks here, semis and AIs. The reason Air Text Systems is surging is because, if you notice here, adjusted EPS, so they made decent profits, well, gap loss, but revenue, and just based on this, the stock pumped earlier today. From literally $68, it went all the way to $100. Keeping only this aside, you can see 20% up, 22%. Look at the Magnificent Five. Again, in the previous report, we discussed how a lot of the investors are rotating money from the semis to so-called the safer ones, Apple, Amazon, Google. While these are in green, unfortunately, if you look at SanDisk, it's down. Applied Optoelectronics, this was the previous one we discussed. SK Hynix just got listed, debut on NASDAQ. You need to allow some time for this to actually play out. Too early to say anything. Again, one of the competition is trading more than what's it's worth in South Korea. Look at XT, brutality. Look at Micron here. And this is a Cerebras system. Now back to this. The semiconductor market shows mixed sentiment, positive on government investments and AI chip innovation, but negative on China competition, fierce, weighing on US memory stocks. Overall cautious optimism prevails with regional divergence. At word on the street, DeepSeek, which is China's core model, LLMs, is planning an IPO. Let's see how that plays out. Watch for escalating competition from Chinese semiconductor firms, driven by massive state support, threatens market share and pricing for US and Korean memory makers. So you have Korea and you also have China now. Investing in specialized AI chip designers strike billions in major node wafer capacity as tightening supply and AI demand create near-term growth potential. Again, it's cyclical. Monitor China semiconductor advancements closely while diversifying supply chains and investing in niche AI chip startups to hedge against competitive risks and capitalize on emerging technologies. Micron stock falls 8% on China competition fears, drags peers. You see what just happened here? When Micron or SanDisk goes down, investors lose interest or risk tolerance, and they literally diversify from every other chips. Tower Semiconductor initiates $4 billion expansion in China. SK Hynix shares jump 8% as Asian tech stocks rally. The rally was driven by positive sentiment in the memory chip market and broader tech recovery hopes. You see what's happening here? The irony, basically. TSM CEO reassures no loss of competitive edge. Basically, if you pick some of the companies, instead of going all in on memory, you can hedge. But unfortunately, retail is just picking all Tom, Dick, and Harry of the semiconductor industry. I'm not saying all the companies are bad, just like I always say, but overvalued, massively overvalued. Look at this, Cyber Semiconductors. This looks brutal, extreme brutal. Anyways, ladies and gents and investor friends, just be careful. It's wild out there. And before I end, based solely on the scan intel, this is a quick summary. The biggest risk appears to be the rising competition from Chinese memory chip makers, which triggered an 8% drop in Micron stock and dragged down other US semiconductor firms. This reflects broader geopolitical risk and investor anxiety over pricing pressure and market share loss for US-based companies due to China's aggressive push into memory semiconductors. If you like what you see, subscribe, and I'll see you in the next Grid Report.